Everyone is in a great mood. It's Friday. We're on a 4-day winning streak. New highs on a Friday. Where have we heard that scenario before? We had a busy show. We got earnings. We got 13 Fs. We have a deal no one probably cares about. We have a top-notch guest at 8:35. We're going to talk trading, all kinds of trading with Rob Friesen, Bright Trading. Folks, it's Friday. And yeah, I know it's 8:02. Let's get pre-market prep started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, traders, let's get those charts up there. And wow, we had a strong close yesterday. We had some follow through, making new highs for the move at 53, 59, 53 off 20 handles, just off the high of the session. Buck giving a little bit back here, down 11 cents, 100.61. TLT, everyone throwing the bonds out the window, up 76 cents, 86.83. Crude struggling on the week, down 14 cents, 67.45. GLD, who needs gold, right? Down 6.21 at 291.55. SLV back under 30, down 53 cents at 29.08. Bitcoin just hanging out here, up $630 at 104,130. All right, Triple D is ready. He is wired. He has got so much information to share with us today.
Information station.
Charter. Let's just get this out of the way.
Let's get it out of the way. Who cares about Charter? Do we want to talk even about Charter? Do we want to mention mergers in the cable communications area? I guess we can. Charter and Cox Communications announced definitive agreement to combine companies. Charter, trying to give you details here. I guess I should have got that, but I just didn't even care at all. No, it's a bunch of fundamental stuff. Do we have a price? Is there an actual price? Brenster, is there an actual price on this? Because this press release doesn't even tell a price.
Higher.
I'm just reading the actual press release. So, anyways, I don't know. I don't know the price. I don't know if anybody really cares. But Charter is merging with Cox Communications. Charter is trading up CHTR. The stock has been just pretty much a disaster until a month ago when everything else started going up. But if you go out to the weeklies or the monthlies, you know, here's the stock that was $800 back in 2021. So it's going off the board a lot lower. If you know the price, let me know. I don't know why in the hell. They can't even do that, right? I mean, here's a company that's been not firing on any cylinders. They put out a press release about a merger, and it doesn't have the price in the front line. I have to go all the way down, and we're trying to read. There's a lot in here. You'd think that would be right at the top. Oh, what price are we getting? Shouldn't that be at the top?
I have no idea. I have no. So, all right.
I don't see the price at all. I just literally, like, there's 5 pages here I'm going through in the actual press release, and I don't see a price. Maybe I'm blind.
As far as I'm understanding it from looking at the press release, Charter is buying Cox. So it's the public company buying the private company.
Oh, yeah. Okay.
So there wouldn't be a price.
It's combining, but now Charter is buying Cox. So Charter is still going to trade. There you go. Brent with the save.
Think about it this way. Charter is the one spending the effort here. Charter is going to be paying $4 billion in cash, $6 billion in notional convertible preferred units, and a bunch of Charter shares. So there's dilution also.
Okay. So Charter, they like the synergies. I mean, this is probably, you know, more mergers out of necessity because the industry is in decline. I'm not interested in buying Charter on this. It's also up 6.66% right now exactly, so that's a sign in itself. Never like to see your stock up 6.66%. Sign of the beast. I'm staying away. I don't know what it's been doing all morning, but it's not for me. Not going in Charter today, not going in Charter tomorrow, maybe not even going in Charter ever. I think I even stopped trading it. That's how much I don't like the company. So
yeah, high price stock, pretty thin. Yeah, before we do that, Eric M is asking about Dennis's presentation in the STN room on risk and getting out of trades. Yes, Eric, if you sign up for STN at a future date, you will not only get access to that presentation, but you will also get access to the other 3 presentations that we did, and also the weekly
There's 12
presentation.
hours of educational content up there right now, and it's going to be continuing to get education in that room. So we're doing a weekly segment now, once a week, where we're just trading pencils down or keyboards down for a second. We'll teach you something. So yeah, if you're interested, that's over there. It's not posted yet. That'll be posted next week.
You guys are so excited about these 13 Fs.
I am.
Yeah, you're fired up, Dennis. So I'm going to give you the stage.
So, okay, we'll start with Buffett, because why do you start with Buffett? Because Buffett is usually the only one that matters now. We used to 10 years ago, oh, there's new positions over here, and look at what this person did, and look at what this person did. And this stock's moving off of Ackman, and this stock's moving off of Icon. The market lately just gets so overwhelmed. Like Brent was saying, we were breaking them down the S10 right as they were coming. It was 150, it hit at 4 o'clock. We're like, holy crap. But you don't have to go holy crap, just open the Buffett one, because the only one that really moves stocks for sure is Berkshire Hathaway, and they move them a lot. There's another one moving here this morning. We're going to get to that in a second, because it's very interesting for Michael Burry. But let's stick with Buffett here for a second. So he took new positions in nothing. No new positions. But again, this does not count. So the 13Fs does not count the April down. This is for first quarter. So we don't know if he bought anything in April. And we do know, actually, CNBC, well, we'll get to that in a second. Teasing something. So he added positions to Pool, P-O-O-L. He likes swimming pools, apparently. That's up 14 points because he really increased his position substantially. He went from like 200,000 shares. I think Brent said he went up to 800,000. So substantial increase in Pool. He added to his Domino's Pizza. That's trading up a little bit too. He also added to his ST Zebra, Constellation Brands. He increased that position substantially as well. That's up $7 as well. He sold his entire position in Citigroup. Citigroup is now gone.
Was that a big position? Was that a big position?
So I don't think so. His Apple remains the same. We broke it down, and Brent was doing a great comparison, and we were really breaking it down in the STN room on what he did. So we know when he adds positions, they go up. When he sells positions, they sometimes go down a bit. We had a good trade on the Citigroup last night. That's pretty much it. But then CNBC is reporting that Buffett actually has a new secret position. So it has not been disclosed, and it is not in this 13F. So we can assume he's probably been buying something maybe over the course of the last month and a half, because we don't have anything from April. But they are reporting that he has a new secret position, and he is still accumulating it now. That is what we know. So we don't know that stock. I asked Twitter last night to speculate, on what they think it might be. There was a million answers to that. We don't have any idea whatsoever what it is. But when that gets disclosed, that stock is going to fly. So people are asking, when are you going to find out? When are you going to find out? If he goes over 10% of the company, we'll find out what he stays. If he stays under 10%, then we won't find out until potentially August, or unless Becky Quick goes over there, because Becky's obviously been friends with Warren Buffett for a long time and sneaks it out of him. But right now, we have no idea what that's. A lot of people saying it's UNH. I don't know. We don't know what it is. We know he's this huge value investor here, and yeah, UNH has some value now, but I don't think it's UNH, but we don't know it's not either. So that is what we know, is there's going to be a huge move in a stock when we find out what the new secret position is. In all likelihood, we won't find out for a while unless he goes over 10%. And then it'll get disclosed within 48 hours, and that stock is absolutely going to fly. So that's the Buffett stuff. I mean, the Pool's probably the biggest mover because it was his biggest percentage increase, where he was up like 400% more shares in it. So that's, up substantially. I don't know if I'm running to invest in pools. I have a pool. I spend a lot of chemicals, so maybe it's not maybe it's like a cash cow, these pool companies, because they get to make so much from the chemicals. But I'm probably staying away from that. The other one that I found was very interesting was Michael Burry. If you don't know who Michael Burry is,
say to keep an eye on this 330 level?
Yeah, stop.
Yeah,
Give us any levels. If there's a level you see on any of those, give them to us.
Yeah, I mean, this just we haven't taken it out. Light volume. A lot of these times, it's like it fades. It fades right off the open, or like on a day like today with the SPOOs up 20. Just buy, and take it up. So keep an eye. If it does continue higher off the open, just be careful it comes back down to it. But kind of a thin stock. So move on to the next one.
So the other 13F, which is so interesting, was from Michael Burry, Scion Asset Management. He sold every one of his stocks in the first quarter, every single stock, which sounds like pretty smart, actually, because we know what happened in the start of the second quarter. All these stocks went down. I don't know if he rebought them all, but he sold every single stock. He sold Alibaba, Baidu, JD, MOH, Pinduoduo, HCA, BRKR, VF Corp, MAGN, OSCR, ACIC, and Canada Goose Holdings, Goose. He sold every single one of his stocks. He added one stock. So he now has a one stock portfolio. As of the end of March 31st, now again, we don't know what he did in April because these are always backward looking. So we just know from March 31st. The end of the quarter, he owned one stock, which he added in the quarter, and it's Estee Lauder. He went all in on Estee Lauder. EL. That's it. He doubled his share count. He was actually already in EL, but he doubled it. So it's not a new position. He just simply doubled his position. So he sold everything he had and doubled his position in Estee Lauder. So now, as of March 31st, he had one stock, Estee Slaughter, as we like to call it. Why he's picking EL? In this world of AI, in this world of, the future, like think about the technology companies, think about, all the cool stories out there. He chose an old makeup company.
I don't understand.
I find that very, very interesting, to say the least. EL, we call it Estee Slaughter for a reason. The stock was $374 in 2021 at $63. It did pop last night because, oh my gosh, Michael Burry went all in on EL. It's fading already. So I don't know what algo got all excited when they saw that Michael Burry went all in on EL and doubled his position. But from 63, 67, it went up to like 69, Joel? Did we hit 69 last night?
Yeah, it did. Yeah.
Oh, these algos are so stupid.
Yeah. Actually 68.79. Quick side story, and this one is true. So you guys doubt my floor stories. But back in a while, in the pits, in the S&P 500 pit, there was a lady. Her badge was ESL, Estee Lauder, and her husband was a big trader in the S&P pit, Louis Lauder, LML. True story. I know you guys don't believe my other floor stories.
The problem is you told us you trade with Lisa Sue in the pits too. So
you know what, Dennis?
Don't know if Joel confuses reality with his dreams.
Dennis,
he's getting
you know what?
dementia.
I am gonna come and rub your nut when that comes out. I'm gonna give you a noogie. I'm telling you, I know this. I'm gonna tackle your 220-pound frame and just rub your nose in the dirt. I'm telling you.
I haven't weighed myself. I think I'm only like 216 now.
Yeah.
Look at me, all fit.
Yeah, I'm telling you, I did bring you brought it up. I'm gonna get to the bottom of this, but hell, I don't know why he's buying this.
With everyone. Everyone was in the pit with him. Everybody. Lisa Sue, the Estee Slaughter people, probably Ronald McDonald. You traded with everybody in the pit.
All right.
Okay.
I really don't know about this. I don't know why he's buying this stock.
He's all in on Estee Slaughter.
Yeah, I don't know.
So this is backward looking. So the 13Fs, all of it is backward looking. Like we don't know if Buffett sold stocks in April. If we don't know if he came and bought more, we do know he's buying something. So going back to Buffett, because I don't know if they care about Burry that much. Going back to Buffett. What do you think the stock is? I want to get to Joel Elconin. You think people are like, a lot of people say, oh, it's UNH. I don't think so.
No.
I don't think it's. I don't think so. I don't think it's UNH. He is a value type guy, though.
I'm looking. I just don't know. I mean, I have no idea. He's it just makes it feel like it's something off the board, something that is really going to surprise people. I mean, you could do a filter, right? It's probably a company with, pretty low valuation, low PE, right? Probably trades pretty good volume. He's not in real thin stuff. So you can run a filter.
UNH fits the bill, but it's like finding a needle in a haystack. There's 5,000 companies out there. Probably 1,000 would fit Buffett criterion potentially in April when everything got whacked. You think about like somebody buying the dip. Everything was cheap back then. Hell, it could have been Nvidia that started getting cheap back then. Somebody was saying it's probably Amazon because it's down 26 times earnings. Could have been a lot of things.
I kind of thought about that. That did pop into my mind a little bit. He's never owned that kind of popped in my mind a little bit. That did.
Maybe he wants more tech. It could have been a lot of things. So in any regard, we don't know right now what that position is. Continuing with 13Fs, you might like this one, Joel. Value Act takes a 9.9% new stake in Rocket, RKT. Joel's been liking that Rocket for a long time. Did you ever buy it? You were talking about buying it.
No, I never did.
Yeah, so it's up this morning. Value Act likes it. Why did they take a 9.9% stake? Because then when they take the 10% stake, they have to report it within 2 days. So a lot of times companies don't want to go to the 10 because then they can just stick with the 13Fs and report them quarterly. So if you go up to the 10, you got to report within 48 hours. The rules change. So Value Act takes a stake in Rocket. RKT is up 4.31%. So that's important too. I know there's an Ackman that sold all his Nike. Somebody sold all their Nike and it's not really responding. It's down. They don't respond much. It's kind of like insider buys. They don't really respond much to the insider sells. You see a little response, but it's not that big of a deal. You see big responses to new positions. And again, Buffett being the main one. But when Value Act gets down and dirty, they look at it.
They're good. They're good.
Yeah, they are. For sure.
Yep. That I can remember. I remember I was looking at Microsoft at like 30 forever. Remember how slow Microsoft was to respond to like the market? The market was going. And then they came in and they bought a boatload. And man, oh man, I don't know if I still got my 30 bid out there. But yeah, they're good. They're good. So, but I think it's really interesting that we're getting this information, but we don't know what they did in April. And I think Brett said we're going to find that out August 15th or something like that.
Well, yeah, it's 45. So they come 45 days at the end of the quarter. So if we think, to find out April, May, June, you'll find out all that. You won't find out what he did in April until August 15th if it's filed from 13Fs. Now, I think we'll find out the Buffett stuff more. One, because I think somebody at CNBC, who obviously has lots of friends there, might be able to get that information, or it might leak, or he might go over 10%. And if he goes over owning 10% of the company, then we'll find it out sooner. So that's where we're at on the Buffett situation. So we all wait. We'll know August 15th for sure. At the latest, we'll know August 15th. So write that day down, Buffett disclosure day. But we'll probably find out before that. Media will find it out somehow. There's so many leaks. So, okay. That's your 13Fs. Now we did cover the merger. Let's go to the earnings. We got Rob Friesen coming on here in 15 minutes, which is going to be awesome. Actually, I want to talk UNH first. Let's go to UNH.
Did you see me put the chart up there, or did you just follow the script?
Yeah, no, I actually read what Brett said. Brett says get to UNH in the background. We got a producer here. Brett's producing us. I don't want to. Brett's controlling the show here in the background. So he's like, Dennis, UNH. Okay, I'm on it. Okay, so UNH trading up $9 here this morning. It's bouncing. There is people speculating that Buffett's the person. I don't think that's it, but I think UNH is just dead cat bouncing here because when stocks get killed, there is people coming in here and trying to call the bottom again. We all want to be a hero. I tried to be a hero at 320 on this thing. Stopped out at 312. Glad I've stopped out. It's 283. Got down yesterday to 248. UNH, when it got down to $248, is trading 9 times earnings. It usually trades 20 times earnings. This is like pretty incredible. Now, the earnings are probably going to come down. They did pull their guy. They've done a lot of things, wrong here. And they got the DOJ breathing down their neck. A lot of problems here. I don't know for trading if this is, the way to do it. But, long-term investing, is there a place for this in your long-term portfolio? I've had 1,000 people ask me that question. Are you buying UNH in your long-term portfolio? I know some of my best long-term investments have been when the stocks are absolutely in the gutter, just destroyed. It's not one that I really had on my radar. It's not really something I wanted to own. I get it, but you also have, administration probably, trying to watch, and attacking the whole entire healthcare industry to put, costs, Medicare costs, DOJ there. There's a lot of reasons to just stay far away. And those reasons are, it looked cheap at 400. It's 283 5 days later. So could it go down further? It could. Could it bounce from here? It could. I kind of think I'm just sitting this one out for now.
Well, I told you I've been talking about the setup in this one, and it's called the seller exhaustion setup. And if you thought the $59 million, 60 million share day was seller exhaustion, well, it wasn't. The next day it went down a little bit. Yesterday, double that 60 million, 122 million shares traded. So everyone, I think, that wants to sell, the big boys may have sold. I'm not calling the seller exhaustion bottom yet. But let's see I like to see it sit still for a couple days, see the volume come down. This is on an 8-day losing streak, and it's been down 10 out of 11. So it's due for a bounce. I would like to see it because I don't think you're going to get a shot at the 248. Now things thicken up. Now, if you want to buy this thing, you're just like, okay, 275. Okay, I got to throw a bit out at 270. Okay, I got, that's what you got to do. You're not like, if you put a 275 bid out yesterday, bip, you got it. 270 bid, you got it. 265 for a little bit more size. 260 for triple the size.
Joel's talking if you're an institution. For all you institutions and hedge funds that listen out there.
Yeah, that's the only way you're going to catch this thing. Now you got to lift offers. Now, if you're short,
I don't know if you got to lift offers. I don't know if it's just blasting out of here. There's a lot of people who are buried. Somebody said, they think that's going to close the gap here, up to 308. Get your thoughts on that, Joel. Are you going to close the gap on this puppy?
Yeah, it could. It could. I mean, that would be the first target here. I don't think it's going to do it today, because I do think you do have some really short-term traders that, I don't know. Too bad we can't have Fari on. How many Sigma Delta? It must have been like at 50 Delta there when it went to 248. So there's people that picked it out, yesterday, that they could care less about the DOJ. They want out today. They're like, we bought it. We averaged down. No bad news today. We're getting out. So I don't know if it's going to fill the gap today. Let's see what if I could do a 76 and 50. Figure your daily pivot in there. It's probably like around 265. See if you can get it down there if you want to buy it on the cheap.
So you're still looking at buying on the dip.
I'm not selling it.
I'm setting it out for now. It's on my radar. I do like investing in like stocks that are just destroyed. I am that way. And like I said, some of my best long-term investments were when stocks were destroyed. I bought Eli Lilly at $30, $35, and everybody absolutely hated it. This was like in 2012, and they're like, oh, I'm like, it's got a 7% dividend, and eventually the story is going to turn around. This was at 30. This was Eli Lilly, the Eli Lilly that is now trading at $743. I remember buying like Home Depot when it was in the gutter, and I remember buying Merck when it was in the gutter. And, and a lot of these initial trades, my Tesla, for instance, too. My Tesla, which obviously, I had, I was bullish on it all last year. And I bought 190. Then I bought 180. I bought 170. People are like, you're going to lose all your money in that. Tesla Q's coming back. It went down to 140. But I was like, I think the story is going to turn around. I think there's a story here. I think it's going to go. So I was like, this is what, I was talking about in the STN room too. I was like, I don't use stops on my long-term portfolio. I get out of stocks when the story that I believe was there proves to not come to fruition, or there's material changes in the company. But if I would have been stopping out on my Tesla, you know, and when I bought it at 190, I would have definitely got stopped out when it went to 140. I sold that thing up at $400, you know, 6 months, 9 months later. So I'm not saying don't use stops. In trading, absolutely, there's a place for, you know, tight risk management. But investing is a little bit of a different animal. I'm buying good companies at reasonable valuations. So I would ask myself, is UNH a good company? And is the valuation reasonable? If it checks both boxes for you, maybe it makes some sense. I don't know where it goes.
We got to rip 2 earnings.
I don't know where it goes next month. Maybe it goes, you know.
We got to go. We got to do earnings. We got to do earnings, okay. And we got to rip through them here. Okay, AMAT goes splat. They beat 239, 231. Slight miss on the sales, but they don't like it. They don't like it. Revenue miss. I mean, decent guidance, but run it into the print. They didn't blow it away. I don't know. Now you're in absolute no man's land here, technically, Dennis. Talk about the trading action. You got a gap fill at 158. Is that going to happen today? I don't know. I'd buy it at 158. How was the trading action?
So the expected move is $9. We've been talking about stocks bouncing at their expected moves, especially tech stocks, because there's just underneath demand for tech stocks.
Yep.
So Applied Materials bounce area a little bit through there. What did it get down to? 164.5?
Lower.
So it got down 10.
63.55.
So it got down, say, $11. So not quite, but it's back up above its expected move. So think about your CC Ligator, who's going to be on the Stock Traders Network here at 1:30 today. Think about Think about, you know, his bands that he talks about all the time. A lot of times they bounce at that. Take two, for instance, too. We'll do them both together. Take two earnings, which I can give you here right now.
Okay.
Too, because I'm just going to cover them both because they both appear to be bouncing at their bottom of their expected moves. Take two is Buckaway versus Buck10. It's a miss. 1.58 billion versus 1.55 billion. Guidance is kind of there. C's Q1s. It's kind of in line. I'm just not even giving the numbers. I'm just like C's Q 2026. EPS. It's a little bit light. The guidance was light. Stock gets hit. But again, take two, expected move was $13. Take two closed at 230, 234. What was the low, Joel?
To take two, the low was, I got 220.50.
That's down 12. The expected move was 13. So you can see people just getting a little bit ahead of it again. So I would say there's buy the dip mentality on tech stocks and storage stocks and stocks that are in favor at the bottom end of their expected moves. We're starting to see that. And we're seeing these bounces. And like I said, in this earnings season, we've seen a lot of tech stocks bounce. Not all stocks, but tech stocks especially. So hard to bet against Applied Materials when it's down near the bottom of its expected move. Hard to bet against Take Two. Hard to bet against when the market and money managers need stocks. They're looking for dips to buy. Take Two already has been bought, and it's already up $10 from the low. So it got it all back. Can Applied Materials get it all back? Maybe not today, maybe not tomorrow. Do I think it probably bounces back to $175? That's what they've been doing. Trend is your friend. So I won't fight you if you're playing it for that.
This is such a weird chart. I mean, this gapped up. It has a big gap. So look at 165.65. That's a gap up area for Take Two. I mean, round trip like this, I think you just got to keep an eye on that close from yesterday. That's a good number for me and Take Two. That's 232.34. That also happens to be the high close of the move, and of this recent rally. Oh, fill in the gap too. Oh, filled the gap yesterday by 34 cents. So nice area there, but we'll see. After a big dip like that, people seeing this back in scratch. Not bad. I'll keep an eye on that closing price. Okay, we also had some other earnings. Cava Group, CAVA. What was it? A bounce on this one. I wonder what the expected move on this one was. Look at Cava's results. Cava, they beat 22 versus 14 sales. Slight beat, 331.83 versus 326.88. Revenue jumps 28%, bumps up new restaurant opening guidance. I don't know. Had a nice run. Let's see what. Wow, this is digestion here. If this thing can catch a bid early and hold a sustained bid at 99, looks like you got some room to the upside. But the buy the dippers already came in off the print. This got down to 93.02.
Expected move I did not calculate on this one. I think somebody in the STM room, I thought they said it was around $91. So you're kind of there too. Same thing. I don't know. Again, you get into something like Kava. These are tougher because it's trading really nosebleed valuation. I mean, you're trading like 80 times earnings for like a food, a restaurant. A lot of people think it's the next CMG, so that's why it gets a premium multiple. But I think, again, just this one's the nosebleed valuation. But does it get bought? Probably. I mean, that's what they're doing. So why am I going to fight that?
Okay. All right. Did we get to those? Oh, we got a disaster of the day. And of course, I hate this stock. I don't know why I still own it. Well, actually, this was a Lisa pick. I think I own it right around here. Doxivity. Let's see here. How did they do? They beat 38.27. Oh, that doesn't mean anything. They don't make much money. 138.29 versus 133.73. Guidance, and they hit it on the low guidance. They bought, probably above the expected move in Doximity. Low 43.80. I don't think the
expected move was $10, so I think it's through it. I think it's probably right. I can go quickly grab it. Take me one minute to grab it or less.
Man, they don't make no money. What a gift when this thing went to 85.
$48. It got some support down here. I mean, they are in buy the dip. I don't know if Doximity is the kind of stock they're buying the dip on, though. So I'm kind of sitting this one out, too. What's Lisa think of UNH? Did you ask her? Kind of like Lisa likes buying when they're in the gutter, too. She's kind of like a Warren Buffett over there. Lisa does some pretty good picks.
You know what? When Rob comes on, I'll go ask her.
Okay. Yep. We want to know if she thinks of UNH.
And guess what? And everyone's going to crack up. But you know what? She's on the Peloton right now.
She loves her Peloton. PTON. Okay. So Rob Friesen is going to be here in a minute or two. We're going to get him on. We've covered the earnings pretty good, except for QUBT. I want to cover that one. Obviously, quantum stock. We know quantum RGTI dipped on earnings, and that dip was bought the very next day. Yes, the CAT came back the very next day. The RGTI came back the very next day as well. That just fit the script of a dip they were going to buy, and they absolutely did. QUBT is not giving you a dip here this morning. QUBT is up $1 in the pre-market. Their earnings I can give you as well, and I want to get Joel technical levels. Again, I don't know if you know if they have earnings. I think quantum stocks make money, but do they have sales? Actually, this one does make money. How the heck do they make money? That can't be right. QUBT made 11 cents and had sales of $39,000. That can't be right. Something's wrong on that. They didn't make money. They had sales of $39,000. Not 39 million, not 39 billion, 39,000. Is that right? I mean, these companies are so far away from, these are all stories. The only thing in here is a cool story. I don't know if there's a long-term fundamentals coming here, but the earnings here, very interesting to say the least.
I don't know, man. It looks like a breakout. Yeah, it looks like a breakout. Yeah. I mean, it looks like a breakout. It smells like a breakout. Is it a fake out? I don't know. If this could get through the pre-market high, 1047, let's take it up. Really no resistance in the $10 handle. If it got up to 12 today, if they get silly, you had 4 tops just above 12 earlier in the year.
Impossible to, trade anything on fundamentals. Don't even look at the fundamentals. It's all about story here. There are no fundamentals.
Okay, we got our guest.
We have a guest.
Rob Friesen, Bright Trading LLC president, COO, longtime friend of Dennis and I, a trading veteran. Dennis, I'm gonna hop backstage and I'm gonna let you run with it and follow the script, okay?
Script. We script anything? Is there scripts? Rob, it's been a while since I talked with you. Obviously, I worked with Rob over at Bright Trading for 22 years. I've learned so much about all of my trading strategies. A lot of them came from Rob Friesen. Like, this is the pioneer of pairs trading here, folks. Like, statistical arbitrage, all of it right here. You're looking at the father of pair trading right here. Rob Friesen. 1999, I've known you since, buddy. But how you been? I haven't talked to you in a while.
Not too bad, but I can't take credit for it. It existed before I existed.
But you made it for everyone. You brought it to Bright Trading. You were my father of pair trading.
I think what we did was, and it took a little bit of trial and error, but I think we made a pair sort of as tradable as an individual stock by sort of using a factor-based approach instead of just ratio. So when your pair actually moved $1, you made or lost $1. You know what I mean? We just made it simple to trade pairs like you were trading stocks.
Okay.
And that was before, I think that was before a lot of these other, relationships came along that people do now. But, I think the very first, we were doing risk arbitrage before that. That's why. So risk arbitrage, you have an acquirer paying something for the target stock, and it could be pure stock, could be stock and cash, could be pure cash. It's easier to trade pure stock, obviously. But from those lessons learned in risk arbitrage and from that relationship, we took it into the pairs world. And I remember the very first pair was Fannie against Freddie. And that didn't go so well for me, making that leap. But from that, we learned a lot, and we were able to pass it on to traders that, ended up doing very well. So, so I've had a long career.
Can you just quickly explain to maybe some new listeners that don't understand what pairs trading is? We have lots of listeners and lots of traders who listen to the show for a while understand it, but just quickly just dive into like some basic pairs, like how you create the relationships to trade them, almost like a single stock. Just dive into that for a quick second.
Well, the safest place to start obviously is in something that's highly related, like a supply chain situation or two stocks that constantly battle it out. One company's improving, the other company sees that they improve, so you kind of have this constant lead lag relationship. So you might take two semiconductors, you might take Coke, Pepsi, just common relationships. What the place not to start is a large or mega cap against a very small cap, because you're going to have all kinds of things that come into play versus just trading, two peer stocks that are similar in market cap and all that. It doesn't make those other things wrong. It just makes it more difficult for your learning curve. So start with something that you and can relate to, and it could even be a good semiconductor against SMH, or the semiconductor ETF or something. That could be a good place to start. Or in the oil patch, Chevron against XLE, the energy sector ETF, right? So that's a great place to just get your feet wet and probably not get hurt too much as you're learning. But what is the purpose of it? Obviously, to make money. It's you're trying to make money, but from what context? From either a mean reverting opportunity or maybe an expanding opportunity where they're diverging. The place not to start is where you see something like UNH, where it has a massive catalyst and it's was falling from a premium, and you go, hey, well, this is a good discount. I think I'll just jump in and buy this. Now, what can I pair it with? Oh, get another healthcare provider and just arbitrarily pair it. You might be taking on micro or macro risk that is beyond your ability to manage and handle, right? So don't just arbitrarily go into things just because there's huge discount or huge premium. Look for more stable relationships, but that there's still some mean reverting opportunity there or diverging opportunity.
Yeah, like when you say, for instance, like a UNH and put on like Humana against it, that would, if you pairs and charted those up, that's just blowing right out. Like, obviously because as a Humana price doesn't keep up with UNH, it continues to go. So you want to see something more in a range.
Well, and you have a major catalyst. That doesn't make catalyst trading wrong, but you have to, again, it's a whole different set of research, homework, understanding, and also the typical problem. I was going to address some things here today about areas where traders get into trouble, and one of them is this whole concept of like going too soon. You see an opportunity, you really need to make money. It looks like a great opportunity, but you didn't do enough homework. You don't understand what's going on behind the scenes, and you just jump in too early. So you get run over, and then often you capitulate, and then you don't want to, then you want to take that off your screen and never trade it again because you got burned on it, right? That's not the right approach. So that's one of the areas that people struggle, going too soon.
So Rob, let's talk about time frames here for a second, because you can do pairs trading as a day trades, you can do them as swing trades, you can probably do them longer term too as well. Talk about like where the sweet spot is for like doing pairs, and just talk about time frames in general.
Well, intraday, on a very tight time frame is pretty tough, especially if you're trading a highly related pair. Sometimes they don't have that much movement or whatever. So often, a 3 to 5 day swing trade could be better for a pair. But there's no reason why you can't do a bit of both, and that's trade around the core position. So we call it trade some, hold some. So if you have a good starting point, to not throw all your capital in at one price, still put in a portion of the capital that you intend to trade, and then only trade up to your maximum that you have decided you're going to allocate to it. So don't go beyond that. And also don't continue to add to a pair if it's going against you, if you haven't had any production from it, meaning you haven't been able to capitalize on turning some inventory over. So inventory, think of it, there's principles in traditional businesses that still apply to trading. One is inventory management, capital turnover. So what's your capital turnover ratio? Are you able to lock on profits from some of the capital being traded before you go and add more to a problem, which could be, there's no guarantee in a correlated pair that it's ever going to come back, or co-integrated pair that's ever going to come back to what you want. It could stay in a whole new range and it's shifted out of a previous range, and you're stuck with that inventory. So you have to manage that. And my rule of thumb is, three tranches of capital per pair. Don't add the third if I haven't had any production on tranche 1 or tranche 2, right? Don't add the third. And then the other rule of thumb is, at a point where you want to capitulate, and this has happened many times. So it gets to an extreme, it's right at your, let's pull it off level. Let's move on to something else. It's often wise to make a bet there, meaning that you could allow that third layer of capital at that point, but it's on a very tight leash. And I find this is another principle, is that often people capitulate or have their stops at kind of a predictable point. Like it's like, the industry sniffs it out and knows what's going on in terms of, where people that tend to throw the towel in. And that actually happened to a trader, of mine that I was working with just the other day. And it was like, pulled it off right at, and we reviewed it, and it was like, you know what? You need to be ready to put that back on, because I think you just made that classic mistake of just pulling it all off to ease the pain. And that was the ideal time to make another bet. But again, you got to keep it on a tight leash, because you don't want to compound the problem if you're wrong. The way this market is these days is like, and I like, you kind of want to monitor yourself. It's like every time you trade, if you're getting whipsawed or whatever, like if you did the opposite, it goes back to when I first met Bob Bright, sat down next to him to trade. He said, whatever you think you should do, just do the opposite and you'll probably be okay. I mean, honestly, that was in 1998, and it was like, just whatever you think you should do the opposite and you'll be okay. And this market is almost like that these days again. So
yeah.
So anyway,
sorry,
back to time frames. That I can't emphasize enough that sort of trade multiple time frames within a relationship of pairs, or even on individual stocks. Don't neglect what can be done on an intraday basis if that's part of your game, right? And you have to. The thing about for traders to trade multi-time frames, multi strategies, and the people that do the best generally have more than one strategy, and it's really important to consider that. So if you're in a retail environment, if you have to sell something to then buy something else that you really want to get into, that kind of hampers you. So if you have lots of buying power, then you can just tackle that other opportunity without having to get rid of one, right?
Hey Rob, before we let you go, can you tell us a little bit about break trading? We have people from many different backgrounds here. Obviously the markets have changed, the dynamics of the markets have changed since COVID, and some people they want to try and make this a career. So to tell us a little bit about break trading, the steps that are needed, and how you can help people choose this profession and make it a successful one.
Right. Well, we have a lot of people contact us that really don't have any capital to work with, and our model is that you still have to make a trader deposit once you pass the 57. So that's the primary exam that needs to be done. The SIE is Securities Industry Essential is the preliminary one. You can take that on your own. You don't need a firm to sponsor you. But you get through that, and then the Series 57. It is difficult, but it's just a barrier to entry. And once you're through that, then you can make a trader deposit and get started. So we still specialize in leverage for traders, and leverage is obviously that two-edged sword, but so it's really helpful for hedge strategies, for basket trading, for what Dennis and I were talking about, pairs trading. It's capital intensive, but it's that steady sort of grind that you can do with your strategies and make a career of it, rather than if you feel that you're always having to take shots because you have low capital and you don't have that ability to undertake multiple strategies, multiple time frames. So we really specialize in just providing that leverage for you.
Okay, and how can people get in touch with you? What's the best way to get in touch with you if they have some questions about the industry and getting started?
Just go to stocktrading.com. We've had that website for, I don't know, for almost 40 years probably. So go there and just fill out a questionnaire or send a message through. That would be the best, probably.
All right, Rob Friesen, Right Trading COO, long-term
Can I,
market
can I,
vision.
before I run, can I throw out something for your traders?
Yeah, please.
I want you to monitor something, because you all have various strategies. So I want you to monitor every time that you're working your strategy and you feel the urge to step outside of it slightly, or you feel a twinge of greed. and you make a decision off of that, does it go bad? Because what I'm seeing is every time I review traders that are struggling and, or, having an anomaly in their situation, it's correlating right back to they stepped outside their sort of institutional, framework of what they were working on with their strategy, and they stepped into greed, and it backfired on them. So I just want to throw that out, because if you monitor that and you deal with that, you're going to do so much better.
All right. Thank you, Rob. Great advice, and we'll be getting more of your input in the STN room in the coming months. We're looking forward to that. Rob Friesen, veteran of the markets, COO of Bright Trading. Thanks, Rob.
You're welcome.
Thanks, Rob.
Okay, Triple D.
Markets. Yeah. I mean, lots to talk about here. One thing is it is options expiration.
Yes.
It snuck up on us. It is only the 16th, so we always have options expiration between the 15th and the 21st, third Friday of the month. So this is an earlier one. So it kind of snuck up on us pretty quickly here. I know options expiration can have some wild volatility, can sometimes, give you some swings and sometimes give you some good entries or good exits on your positions as well. I always say on options expiration, if you're looking to get out of something, it's not a bad idea to have your order out there, because sometimes you can get out at a really good price on the open or even on the close. Why is that? You have a lot of institutional money managers coming in. Maybe they have open options positions, but they're jockeying the stock against the options. CC Legator's talked about this. He'll talk about this again at 1:30 on our network. But he's obviously specialized in this for a long time. You just have money managers that just need to get out. It's not a matter of like, oh, I want to buy this, or I need to hedge. I need to get out. I need to work out of these options. I need to get go. So whenever you have somebody that needs to trade on the other side, there's always an opportunity. And there's a lot of traders that need to trade, big traders needing to trade on the third Friday of the month. So that's why the way I approach it, we'll be doing some live trading, obviously, when we get in the STN room and, at 9:30. I provide liquidity. That's the main strategy into the open, is that I have orders out there. So if I think a stock's opening too low, I'm a buyer. If I think a stock's opening too high, I sell it short on the open. I use the OPG order, which is opening only. Some platforms call it limit open, but basically trying to get executed on the opening price. So right now, imbalances are early. We don't get NASDAQ until 9:25, so we don't have a look at them. They are to the sell side. And I think the S&P futures are leaking because we were up a little bit, but the imbalances on the stocks went to the sell side all morning here. So does it continue? Do they flip? Anything can happen. They can flip very quickly, but I just cherry pick a few for you. Disney's got 129,000 to sell. AT&T 372,000 to sell. Bank of America 406,000 to sell. Walmart 229,000 to sell. They're all to the sell right now. Now that can change. Things can change quickly, but I mean, if those sell imbalances all hold, the S&P futures aren't going to open up 10 points. They're just going to come in more. If they flip, things change, and that's when you got to be ready. You'll see these violent moves on the S&P futures sometimes on this day, and that's because the imbalances flip. A lot of mornings, the S&P futures lead. On options expiration, I can promise you, people hate it when I say this, the stocks lead on options expiration day, because there's so much more information in the individual stocks. That means if all those sell imbalances flip to buys, the S&P futures will start lifting. So stock information actually leads on options expiration day.
I agree. Also, one thing that keep an eye on is like, where's the pin? Where is the most open interest in a stock? Because you will have the call buyers. Let's say, this is giving an example here. You have the Microsoft 450s, right? The 450 calls. You bought those early. You want all-time high, that probably still has some time value in them. What do? There's still $1.77 in the money, but if it gets down to 450, it's going to be zero, right? Or not zero, but the premium will come in. If you have the 450 puts, they're not looking good right now. So if you're looking for the pinning action in stocks, go like Apple. I mean, I'm just going off the prices here. Apple. Probably, 210, maybe a boatload. Nvidia, probably people got a boatload of the 135 calls and they selling stock against it. So that's another thing. It is early in the month, right? Because May 1st was a Friday, so you're getting an early options expiration. So I think we covered that. If there's
We're
any
leaking
questions,
pretty good here right now, though, so it's making me feel like that some of these sell imbalances might actually hold. So obviously 925, when we get the NASDAQ imbalances, that's going to be a little bit more of a tell as well. Earnings preview quickly for next week, because we don't have anything tomorrow, or we don't have anything tonight, I mean, because it's Friday night. But we have a lot on the schedule for next week, so I'm just doing a quick preview here. Tuesday, we're going to get Home Depot, Palo Alto Networks, and Toll Brothers. Wednesday is loaded. Snowflake. We're going to get Baidu. We're going to get Lowe's, Target, TJX, Zoom, Elf Beauty, Best Buy, Williams Sonoma, XBEV. Thursday is loaded as well. We're going to get Workday, Ross Stores, Deckers, Intuit, Dollar Tree, Autodesk. We're going to get Advanced Auto Parts. So we have a lot of retailers reporting, but we also have some cloud names as well. So definitely some big names reporting here next week. My typical strategy is to be long those stocks ahead of the reports. Often works well. I also think there's the possibility of getting deal news this weekend. I talked about this yesterday. I talked about this the day before. It's the reason why I'm not short any stocks, even though I'm not liking some of the pricing action. I feel like we're going to get a deal. I think we're going to get a pop, and it could potentially take us to like SPY 600. So I feel like it's coming, if not Monday, Tuesday. I think traders are speculating that too. I had a Reuters reporter call me yesterday. Why is the market going up? And I simply said, I think it's deal anticipation. I think we are running up on the anticipation that there's more deals coming. Japan, Saudi Arabia, Iran, the Penguins, who knows? But there's probably more deals coming next week. Trump has hinted that the deals are very close. They want to announce more deals. They're going to get more deals. And the market is still popping on deals. I mean, the market's popping yesterday because, we're getting deals even with talking with Apple and Boeing and General Electric, about, doing more manufacturing over in the U.S. Apple, trying to build some facility here as well. I mean, so there are deals coming here, and the market is applauding deals big time here. So until the market starts selling off on deals, bulls remain in complete control.
Interesting comment here from PJ Shannon. He said, "Doesn't stock info always lead?" Well,
as a
PJ,
combined, I would say no.
Yeah,
I think futures lead a lot. I mean, there's this been, it's the chicken and the egg, right? They're the same. So the 500 stocks, and then you have the futures. But when you see a macro headline, so like after hours, like Trump breaks in, deal. Let's just say there's a deal announced. And let's say it happens right now, just hypothetically. The futures will blast because it's the easiest thing to just go and buy quickly. So the futures blast, the algos buy it up. Then all the stocks pull up towards it. So definitely in that case, futures are leading. Information on this day is like the futures are looking to the stocks for information. But when they just see a headline like that, they know like the stocks are going to go, so we're buying the futures. So it goes back and forth to a certain extent. I'm obviously a stock trader, but I mean, there is traders, futures traders that firmly believe, and I've been in arguments with them, like good futures trader, that Dennis, you're wrong. Futures always 100% lead. I'm saying they don't always lead. Today, they definitely don't lead. I think a lot of times they do. Today is not a day that they lead.
And PJ, I'll just point something like the obvious at them. Like it's Sunday night when the stocks are closed, and the SPOOs are up 100 points. They're pushing the stocks. The stocks are going to open.
Oh yeah,
they're going to be forced.
Yeah,
they're not. They're going to be forced to go to those levels. If the opens down 100 points, what happens? Does it open up 100 and go up 120? And the same thing on the downside. Today, I'll go in Dennis's camp. There's market dynamics. There's the other thing with what the options expiration is. Do they want to roll? Like you want to keep that. Like I love Microsoft here. I want to keep my 450 call, but it expires. So what do I do? Do I take the stock? Do I roll up to the one next week? So market dynamics going on. I was hoping for just like big buy imbalances, and then like high open like right at the pre-market high. But looks like some people are taking a little bit of profit here. So we'll see. We're 13 points off the pre-market high, but be aware those imbalances will flip. And then if you're tuned into the STN room, we will give you those live updates. 9:01. We started a little late. We'll end a little late. Tommy Lackey will be joining us on Monday to discuss his indicators, where we're at in the market. I asked Lisa about UNH, and she wasn't like in a super buy the dip mode. To her, they're a good company. They're good on they're good on the reimbursements. She mentioned some companies that weren't good, but they're basically private. But she had no problem with them. But it's all about the news.
She's setting it out,
like,
though. She's not buying
yep,
right now.
yep. She's like, and I go, it went from 600, 250. And they did it. So, that's it, folks.
Okay.
Thanks for joining us. Let's keep this winning streak alive. 4 days. We'll see if we can make it 5 today.